Part 3 of don't buy a home in this market until you watch this video. To maximize your borrowing power, you want to clear all your debts. So credit cards, student loans if you could, and most common, any car payments. So a lot of people finance and lease your cars through dealerships, and most of those leases or finances show up on the credit bureau. So the more debt you have, the less you can borrow. So hypothetically, every $300-400 of payment, that's like $100,000 of mortgage that you can't borrow. So imagine if you have a car payment of $1,000, you're missing out on potentially $300-400K of borrowing power, which is a lot. So if you want to borrow as much as possible, you want to hide your car payments. So what does that mean? A lot of people don't realize this, but if you go to a third-party leasing company, or even in-house lease, so let's say if you Open Road, Auto Group, like Jim Pattison, they all offer in-house lease, in-house finance options. And if you do it that way, all those finance and leases actually don't show up when they run a credit check. So you can still have your leasing and financing options while maximizing your borrowing power. What's the downside though? So most of the time when you go through an in-house lease, these interest rates will be slightly higher than what the dealer would offer you from the brand. But sometimes when you can pay a little bit more per month, but somehow borrow way more money and utilize the bank's money, that's the way to play it. Want more advice? DM me and follow for part 4.